Welcome to Late Night Stocks. Will we have a midterm election rally? Can the inflation report on Thursday spark that? If we have a rally, will it last long while oil prices hit $100? In this video, we will try to answer all these questions besides talking about Q3 earnings and Fed. In my last video, I warned all the investors about the Fed crash, and this is exactly what I said in the video. As long as we have high inflation data, Fed will be hawkish, not dovish, I think. And I was right. Jerome Powell said it is premature to pause the interest rate hikes. Actually, when we had the first statement from the Fed, it was bullish. They were saying we will raise 50.8 hikes in December. But in the Q&A session, everything is shifted. One person said, "Hey Jerome Powell, stocks are rising with the talks you have. What do you think about that?" And after this question, Jerome Powell answered, "There is no pause anytime soon." He said these rate hikes will continue longer than expected, and that crashed the markets. And on Friday we had the unemployment data. This caused further sell-off in the stock market. Unemployment rate rose to 3.7% from 3.5%, while non-farm payrolls was forecasted 200K, and then we had the actual 260K. Although it was higher than expected, we see this declining trend in the non-farm payrolls. As I said in the last week's video, we had a hope rally from this bad inflation report in September. We had this rally till the Fed's meeting. Please like the video. Then Fed crashed the markets again. Besides this macroeconomic data, we had some important earnings. One of them was AMD. AMD Q3 earnings was not good actually. Their inventories keep rising, and they didn't say any word about China, and this concerns me. Maybe in the next earnings, like Q4 earnings, we will hear more about China, but I will stay sidelines for AMD at the moment, but I will continue to look at this stock. Airbnb earnings was okay actually, but they crashed the stock. I think it is worth to look at. They had a strong balance sheet and good revenue growth. While we had this strong sell-off in technology companies, I was looking at the high margin, high growth and good balance sheet companies, and I found one of them. Paycom Software, ticker symbol PAYC, which is at $306 and $18 billion market cap. It is a software as a service company. They are specialized in talent management, payroll management and HR. At the moment they have 5% market share and they are keep growing. When we look at their balance sheet, they have $2.2 billion in cash and cash equivalents. On the other hand, they have $1.9 billion in current liabilities and almost no long-term debt. If we look at their revenue statement, in the last quarter they had $330 million in revenue and $280 million in gross profit, which corresponds to 84% gross profit margin. From this gross profit, if you remove operating expenses such as R&D and general and administration costs, at the end we have $75 million, which corresponds to 22% operating margin, which is really good. While having this growth, in the last 5 quarters they had positive free cash flow, which is very important for high growth and high margin companies. If you look at the earnings expectations for the next year, we still see this steady growth. Please subscribe to the channel. If you have a high margin and high growth company in this recession period, they can even do better in a good economic environment. If you look at the stock price, Paycom Software was around $550 when we had this hype in tech companies. Now it is at $300. Of course, with a sell-off in Nasdaq, it can go to $290 or $260, but it is worth the watch in my opinion. Okay, so far we have talked about the last week, but what about the next weeks? What we have learned from the Fed? We have another important date this week. On Thursday, 10th of November, we will get the inflation report. And if we get the inflation number under 8, this can really start a midterm election rally. Here we see the S&P 500 seasonality index. Pink is the average S&P 500 and blue is when we were in a midterm election year. As you see, when we have a midterm election, stocks plummet to end of September, beginning of October, then starts rallying. And we are in the similar pattern at the moment. On Thursday, we will get the inflation report. We are expecting 8% CPI and 6.5% core inflation. If we get something under 8, this can be very bullish for the markets. When we look at the Nasdaq, here I marked important dates such as inflation date, Fed's meeting, and some employment reports. After the elections and inflation data on Thursday, we may have maybe a a dip, a short covering, and a rally towards the unemployment data. So between inflation and unemployment data, we have 2 weeks a gap. When we have no bad data, market can have a rally. And December will be critical while we have the inflation data first and the Fed's meeting. But we shouldn't forget that we had a huge spike in oil and natural gas prices on Friday. And this can cause further problems in the future. Since end of August, oil prices are below $93. And since then we are in this flag formation, and on Friday we break this resistance. With this break, from my point of view, oil prices can go to $100, even $105. And if we have that, inflation report in the next months can worsen. Similarly, natural gas prices made a double dip here and started rallying on Friday. So basically in the second half of November, we may have some kind of a rally, but increasing oil and natural gas prices can pressure Fed even more. Since couple of months, Biden was selling quite a lot of amount of oil to reduce the oil prices, but he couldn't manage. He wanted to have like oil in $75 by the midterm election, so made this pressure, but he was not successful. Here you see the chart of US strategic oil reserves over time, and in the recent months we had this sell-off, but at some point they need to buy back this oil. And maybe after election ended they will start buying back, and that can cause further oil price increases. When we look at the events in the future, oil prices timing is very important. Let's say in the December Fed's meeting, if we have the oil prices above $100, that can cause a further crash in the stock market. I think the most of the pain will be priced in around this mega cap Q4 earnings, which is at the end of January, and after that we had the Fed meetings, jobs data, and everything will be more clear after this Fed's meeting and getting out of this winter. So in general, I still expect some volatility in this week until the inflation report on Thursday. Then we will see where the stock market goes. As you experienced so far, this Fed's meeting and inflation data is very important for all the stocks in the stock market. So I spent this time looking for high growth and high margin stocks with positive free cash flow. Once we have a rebound in the Nasdaq, these stocks will benefit more. I hope you enjoyed this video. Please don't forget to like the video, write some comments, subscribe to the channel. See you next week.